Hello, I'm Terry Kramer, and I want to welcome you to our fourth and final day of the Wilbur Wu Greater China Business Conference. During this week, it's been great to see a steady build of insights from the conference regarding the role of technology in the region, regarding specific areas of innovation in areas including education, healthcare, and manufacturing, the enablers for this growth, and an interesting set of views about where from here. Now, the focus of today's conversations will explore both FinTech disruptions and also the most promising sectors for investment. Specifically, we've got three goals for today's session. First of all is to understand what changes FinTech is having on society in terms of lowering costs, improving accessibility, and creating economic growth in the region, and examining the types of winners there might be in FinTech. Second objective is to recognize how local institutions, such as governments, banks, intermediaries, are responding to the rapid rise and adoption of new financial technologies. And then our final objective for the day is, following this deep dive into FinTech, is to really look at broadly where is investment going to happen across all of the sectors we've assessed this week: internet services, high-tech manufacturing, and of course, FinTech. Now, as FinTech evolves in the Greater China region, possibly faster than in developed nations, disruptions are occurring across many sectors, from lending to wealth management to blockchain to digital banking. In our first session today, Renu Bhatia, Anthony Bezos, and Florian Spiegel, who are leaders in the FinTech space in Hong Kong, will address the rise of FinTech in the region, the areas of innovation they find most promising, and the unique attributes of consumers in the region and how this influences commercial opportunities. In the second session, we'll review the investment landscape and most promising sectors for investment in the region. We'll be joined by three UCLA Anderson alumni, all who are seasoned investors in the tech sector, who will discuss where investments are happening, where capital is flowing, as well as the future outlook for venture capital, private equity, and M&A in the region. Now, to get started with our first session on FinTech, this session is going to be moderated by Rob Cope, visiting professor at UCLA Anderson, founder of LA-based Geoeconomics, which is an independent consultancy focused at the intersection of global markets, technology, and public policy. He most recently served as director and chief economist of the corporate network in Hong Kong for The Economist Group, parent company of the weekly publication The Economist. His latest activities cover digital geopolitics, cybersecurity, and business education, and is currently developing a documentary on global cybersecurity and its implications for organizations and society. For both of the sessions, we're going to have time for audience questions. Please pose your questions via the Slido tool, which is embedded at the bottom of your screen. You can either enter in your own question or you can upvote one of the existing questions. Now let me turn it over to our moderator, Professor Rob Cope.
Thank you very much for that kind introduction, Terry, and hello, everyone. It's a pleasure to be here, a pleasure also to be a part of this panel, which, as Terry mentioned, has some very distinguished speakers who have a variety of experiences with FinTech. I think it's interesting that in the context of Greater China, their bases are related to Hong Kong. And as we just saw in that intro video, Hong Kong has this really interesting gateway role for both the mainland and the rest of the world. And indeed, these entrepreneurs have come from all over the world and used Hong Kong as their base. So I think they provide a lot of particularly interesting perspective from that angle of their backgrounds as well. Just want to say a few observations before I introduce the panelists and allow them to make some opening remarks. And one is just if we think about what's happened with mainland China, for those of us who have been involved there, I was, before being based in Hong Kong for a number of years, I spent 10 years in Beijing and worked in various projects. But I remember, in fact, to date it to the beginnings of my time there, I went to a conference at Peking University, and there was this discussion about how can we create a credit system in Hong Kong. And there was both foreign experts as well as local economists and financiers were really scratching their heads on this, because this is something, particularly in the States, had been developed very sophisticatedly, that this credit system. Then, of course, China in so many ways has leaped ahead, both with FinTech, because you've gone from a cash-based society to now something that's not only cashless, but it's hyper-connected digital. And along with that has come a new credit system that was kind of invented on the back of that. So it solved the very question that I recall people really scratching their heads over 20 years ago. So it just shows the power of the technology. Just make one other brief comment before moving into the panel, and that is, if you followed the news recently, of course, it's been known around the world and especially felt in China, the PBOC's People's Bank of China move towards Ant Financial, requiring them to basically start splitting up this company from the payments platform that it was intended to be to this effectively a digital banking platform. I actually love the two major offerings Ant Financial has: Huabei, which means spend it, and Jiebei, which means borrow it. And it created, without any sort of credit card involvement, this unique financial transaction system for people and small businesses that has truly been disruptive. And as this panel is on FinTech disruption, I think they really represented that. And to one of the points Terry made about what local institutions have been doing, we're seeing that right now, occurring just this week with Ant Financial. Okay, so just to set the stage with those remarks, let me now go to first introducing very briefly our panelists, and then turning over to them to provide some opening remarks. So first we have Renu Bhatia. She is a veteran of the FinTech and healthcare industries. She founded FinTech Angels and Supercharger, as well as Orphomic Technology. Apologies if I have not gained those accents quite right, but not my specialty. In any case, that makes non-invasive drug delivery for eyes using ultrasound. She's also been recognized as among the top 100 Asia FinTech leaders and women leaders in FinTech. We next have Anthony Bezos. He is well-versed in digital banking, having built 5 digital banks around the world. After previously focusing on African territories, he has recently been active in Asia, developing FinTech ecosystems as the head of Challenger Banking Economics at HSBC. He is a firm believer that a country with a strong FinTech backbone can help progress other businesses. And finally, we have Florian Spiegel, I should say Herr Dr. Florian Spiegel. He is an innovator, entrepreneur, and executive in FinTech, currently serving as the CEO of Hunter Technology. And as his formal title implies, he's done quite a lot of research in the spaces where he now is active as an entrepreneur. And his company digitalizes and streamlines physical commodities trading throughout blockchains in the global marketplace. Prior to Hunter Technology, Florian founded Hong Kong-based FinFabric, which was acquired by Hunter in 2020. And with that, let me now allow each of our panelists to make some opening remarks. We'll start with Renu.
Morning, actually afternoon, probably where you are. It's a pleasure to be here. There's a lot happening in the FinTech space. And as you just said, one of the seismic shocks that has occurred has been the withdrawal of the Ant Financial IPO, which was quite seen as a sort of a bellwether for where the FinTech space has been in China. But I think there's a couple of overarching sort of trends that are happening. So when I look at Europe and I see people start to talk about contactless payment system as coming to the fore, when we look at China, this has been here for a very long time already. But what is changing here in this part of the world is the fact that the very, very large tech fin companies, rather than FinTech companies, I would say tech fin companies such as Alibaba, Tencent, and the sort of the empire that they have built, touching all aspects of one's lifestyle, has really come under scrutiny. And I think in the same way that we saw at the end of 2014-15, government regulation to sort of cut down the number of peer-to-peer lending companies that had sort of sprouted. At one point, we had over 4,000 of them, which were operating under very little regulatory oversight. And I think what's happened is that the size of these very large tech fin companies has caused concern within the regulatory bodies that there needs to be further regulation, further oversight. And we've seen that come about. And because there is really concern about the contagion and systemic risk, particularly on the payment space, that they pose. For example, between the combination of Alibaba and Tencent with Alipay and WeChat Pay, they almost cover 90% of the electronic payments that occur in China. And that runs into trillions and trillions of dollars. Now, and that is despite the fact that the Chinese government has given out over 230 payment licenses. It just shows the dominance of these two.
Concentration.
The concentration risk is just huge. And actually, for the first time, they've kind of come out and defined what they see as monopoly. It's, any single company over 50% or two companies together having more than 2/3, will need to relook. And I think what this may do for the first time in the last few years is actually perhaps spur a little more competition and even potentially more innovation in this space. Because when you have such large companies, there is a tendency to dominate, and also doesn't really give the merchants or the consumers as much power of choice as they would otherwise have. And so I think this could perhaps create more innovation, create more smaller companies to come to the forefront with perhaps different innovative models. I mean, in the West, you will often see some payment companies, for example, that have concentrated on the hospitality sector or the restaurant sector. Obviously, they've suffered in this COVID pandemic that we've had. But on the other hand, other companies which have been in the e-commerce or providing the payment rails for those have done very well. Whereas in China, with that degree of dominance, we just haven't seen the smaller companies kind of emerge. And I think this could be potentially very interesting to watch going forward, but not just in the payment space. I think the government is going to spend increases regulatory oversight so that the existing financials and banks and institutions, who, to be honest, are working on old rails, being less starved of technology, and also do not have the financial resources to even upgrade all of this, will begin to see more spending coming into those areas. So I think that's an interesting thing. And yet,
Renu, if you don't mind me, sorry to interject, but those are fascinating points. I'd really like to get into them more in the Q&A session. If you want to just finish with a final thought, so I can move on to some other opening remarks, and we'll come back and share ideas as a group.
Sure. I think the other big thing is, for me, China will be ridden by the regulatory oversight. I do not see very many large fintech companies coming out of the smaller Asian markets that have breadth across the region. And at the same time, what we see is companies like Gojek and Grab and from Southeast Asia, which start off with many other types of taxi service or delivery system, developing more fintech platforms. So becoming financial companies through that route. So you're seeing that develop in rest of Asia, and you're seeing far greater regulatory oversight out of China. So I think those two big trends for me are very important, and how they lead to potential innovation and competition.
That's great. No, it's an interesting contrast there, where you've got, and of course, China's developed more, so there's this chance for regulators now, especially to come in and start to deal with that. Anthony, your remarks, please.
Thank you very much, Rob, and thanks for the opportunity. Just a couple of thoughts. I think that if you look at the fintech space and conduct a thought experiment, assume you're not going to start a fintech and raise billions of dollars and be overvalued, and assume the kind of that's the next thing, which is the banking industry has not changed in 600 years. What we do today is what the Medicis did. We buy and we sell money. That is the primary function of a bank. Payments are simply a means to accelerate that process by creating transparency and convertibility. Now, the reason this is theoretically important is because certainly in the space that we're seeing, a lot of the really interesting innovation that is going to move the dial, certainly in the banking sector and the insurance sector, are not the kind of things that many consumers will ever experience or use. They will receive the benefit of it. Most fintech that we have seen, it's true. Most fintech we have seen is basically a glorified user interface on top of the global financial system, which, I think is appropriate. The really radical stuff that we're starting to see is very, very smart innovations in parts of the business that traditionally have been underserved. The second kind of point I'd like to make is that in 1992, the futures market was cleared using paper. So if you went to the Chicago's future market at about 4 p.m, it'd be absolute chaos as people handed over pink slips to each other. They'd take a briefcase full of these pink slips back to their back office, and people would offset their positions. Without the fintech kind of ecosystem that exists today, within a period of 6 years, it went totally digital. So the financial industry kind of has a view of how these things work. And I really do think that the radical innovation happening, certainly in Asia-Pacific region, over and above the consumer-facing stuff, which is new ways of distributing, as Renu pointed out, Grab and the like, who are becoming financial or trying to become financial distributors. There's some amazing stuff happening in the plumbing of the finance sector around blockchain. There's some very interesting things happening around the standardization of risk profiles across banks. I think there's a lot of unsexy stuff that is really a great place to make money. That's certainly what we're seeing.
Yeah, very, very good. Thank you. Knowing that your interest in history and anthropology, I'm not surprised that you made those remarks about just how old we can see current banking systems. Florian, your thoughts, please.
Yeah, first of all, pleasure to be here. Looking forward to our conversation, and a bit building on what we've already heard from Renu and Anthony. Coming from the perspective of a fintech entrepreneur, what I also see evolving, apart from or on top, I would say, this changes in infrastructure that is technology driven and based on blockchain. I do see new models emerge that are retail and consumer facing. Yes, a lot of the action and a lot of the value added, you could say, the real value happened on infrastructure level, on enterprise level, building on top of existing services. We've seen these integrator companies like Plaid, who basically offer a stack of services that is very traditional banking industry stack. What I see emerging, and having been in blockchain now for 6+ years, building solutions in that space, is that we see an acceleration of new models emerging out of this new infrastructure that in a way goes around or under or on top of existing infrastructure. And that clearly changes how consumers interact with each other in the financial services world, how we see investments being made, how lending works, how we use data. It took a while. And I think we were at a point where people thought this is never going to happen at the scale that we thought it would originally. But I see the signs now that this is happening. Concrete examples. If you look at areas that are initially being assessed that, well, this is not really relevant, or this will never have the size that will carry any weight in the financial services sector. Everything around tokenization, non-fungible tokens, we see fundamental change of how people interact with value. So moving away just from the money and transactional aspect, moving also into what does investment mean? What does value mean to me? Where do I put my money? Who do I trust? We really see a shift that is now, in terms of its size, trillions of dollars now moving in these systems. And I think these changes happen by accumulation first, and then they happen very quickly. And if I look specifically at Asia, Hong Kong is a very good example of that. No one really talks about that. We in Hong Kong itself, without being on the consumer facing end, I would say a very strong FinTech center, we have companies in the blockchain space that are world leading, that are turning over billions of dollars every day, that operate still in an environment where they are in between the existing regulatory frameworks and what is emerging, but they operate from here. And we will see more innovation coming out of the space. Is also one of the reasons why we are here. So if I predict over the next 5 years, I think we'll see an acceleration of that change coming, of models coming, much like we've seen, for example, how people invest in the equities markets today, the broader market, I think fundamentally changed. We'll see a continuation of that, and it will be driven by this new infrastructure that Anthony mentioned.
Thank you all for those remarks. I will say, in regards to Florian's mention of NFTs, I do wonder when we get to audience Q&A if we might have some comments on that. That seems to be another one of so many areas in FinTech, but that in particular that's been garnering tremendous attention. So we have some pre-prepared questions. These were contributed by UCLA MBA students, so we appreciate their efforts on that. And I'm going to go across the panel, ask each of the panelists these questions. We'll do this for about the next 20 minutes, 25 minutes or so, and then we'll have some time for audience questions, which, as Terry mentioned at the beginning, you can do through Slido. So let me first go to Renu. And the question is, as an investor and entrepreneur in FinTech and healthcare fields, what major trends do you see on the horizon? And how do these intertwine?
I think the two big trends that I would see from a consumer perspective that's happening is people don't want to go to a bank. They don't want to go somewhere to have those services. They want to be able to do them at home, when and where they want, whether they're working. This is true both in FinTech and in health tech. So if I look at it from the FinTech perspective, I want to do all of my business, financial services business, on the phone, on my platform that I have in my hand. And to some extent, this is also happening in the healthcare space. And they're both coming together in the same way. A few years ago, the idea of having online consultation with your doctor was just not on the cards. Even though places like Australia, where they have very a small population over vast distances, they had actually developed the technology and the regulation.
With radio communications, right?
Exactly. They were able to do this. So the idea that we needed to have, the doctor physically in front of you or the banker in front of you to do those services has changed. And what I think COVID in particular has done is accelerated all of those processes. And regulation, to some extent, again, is moving to keep up with them, because clearly liability is very different when you do it over a phone call versus physically turning up somewhere. So I think that has changed. Point of care, again, the same thing. If I'm giving advice to a client and then asking them to come back and say, I'll have your portfolio ready and I'll give you some advice onto this, in the same way that a patient goes to a doctor and says, well, come back, I'll get your lab tests back and give you the results. You've lost half of that customer base or client base. So all of those things are going to be point of care, point of service, are coming together. So I see quite a lot of potential overlaps in there. I think the big driving factor of all of this is also clearly going to be AI. because AI is going to allow you in the FinTech space to again give you more data, more insight to give value-added services. We're seeing that same thing in the biotech sector. We're using AI to create platforms to identify new molecules that could have potential far-reaching ability in terms of how we discover new medicines. So there is actually, interestingly, there is quite a lot of the same technology underlying these very different use cases. And as far as in this part of the world is concerned, I see a huge applications for the blockchain space. And we're seeing a lot of money going into this area for both for its transparency, particularly in supply chain financing, trade finance, and the same thing in the medical side with clinical data research, using blockchain to basically defend the IP. And we're also seeing it in the pharmaceutical space where, companies are manufacturing the drugs, and that's all on the blockchain to the point of delivery to the patient. And that's particularly important in Asia, where have been potentially a lot of fake drugs on the market, which is, quite a shame. So I think there is the same technologies of blockchain, AI are being used in very different ways between the two.
It's fascinating to see. There's so much talk of convergence, and that's usually used in areas of computing technology and communications, and now entertainment. But indeed, as you were pointing out, healthcare as well. And the blockchain is so powerful; it is so transformative in numerous ways.
And Rob, maybe if we tie back to China, because Rainier, I think these are really interesting points. One thing that fascinated me, and that was years ago, was this service provided by a company called Ping An, and Ping An Good Doctor. And it had this platform with
IPO.
Tens of thousands, tens of thousands, and in the end, hundreds, I think close to 200,000 doctors on the platform providing telemedicine. That was way before COVID. And the interesting aspect of that, it was these consultations were recorded with structured and unstructured data. So the patients agreed to that. And of course, we have a different, I would say, attitude towards the use of data and protection of data, just from consumers naturally. I would say in Greater China, if I speak to peers of mine or younger people, they just have a different attitude. If the service is provided, it's valuable to me. I know, and I'm okay to share some data. So floating on that, essentially, if you think about it, what these doctors were doing, they were training AI algorithms because you had data coming in, you had the doctor then putting into the system a diagnosis and a treatment, and of course that starts being very rough around the edges. But if you have a throughput of hundreds of thousands of patients, these systems tend to get very accurate very quickly. And why I want to mention that, because that has to do with accessibility, driving down cost. And we will see very similar things in financial services as well, where blockchain, as Renu mentioned, more as a data layer and more reliability, not as dependent on sort of the trust in centralized parties, plus AI, and we're throwing around buzzwords, but this is actually happening as an analytics layer, then optimizing services. We will see very similar things coming out of the broader fintech space. Here in Asia, especially.
But especially, please
just add on to something that Florian said. I think one of the key here is the acceptance in the broader society of kind of sharing that data, or people willingness to actually experiment with that data. I think it's quite a sort of slightly pragmatic approach is very much a factor in China and to some extent in Hong Kong, but not even so in Hong Kong. And the reason I want to bring it up, because it is so unique to China, because the hospital authority in Hong Kong also tried to do that, to get the doctors to buy into and share the data on their own platform. And it wasn't quite so successful because the doctors were not willing to do this. The patients were not willing to do this. And I think that's very key, important point. It's how society looks at that becomes very key to the kind of innovation that happens and the trust elements and the usage of that going forward.
I have another question prepared for Anthony, but knowing his interest in molecules and healthcare in general, Anthony, I just want to see if you have some thoughts based on what Renu and Florian were talking about. Oh, Anthony, you need to go off mute.
I think what's very interesting about the points made is that if you look at where the established players are investing, so where banks are investing, and again, exclude all the stuff that is sexy and you have it in your hand, right? So like, I'm going to build an Uber 2.0, or I'm going to destroy Visa. So you move kind of those pipe dreams and you actually focus on where the industry is investing. If you look at blockchain, blockchain solves a very real industry problem. It's not an abstract problem, and anyone trying to solve these problems doesn't have to spend hours trying to convince a banker that there's a problem. And one of those things is, for example, in supply chain, where banks historically have been used as the trusted counterparties. And the problem with being a counterparty for a physical object moving between A and B is when you train to be a banker, you don't learn about forklift trucks and cranes and pirates off the coast of Somalia. And that's all kind of not your thing. And actually getting visibility across a supply chain is quite a complicated thing to do. So you'll see that we invest very heavily in blockchain consortia that are trying to solve these problems. Another area where we see a lot of activity, which is brilliant, is a lot of these innovators have the ability to turn assets that are non-fungible into fungible assets. And once an asset is fungible, the global financial services industry knows how to raise capital for it, how to fund it, and the net impact, on the supply chain and on the economy is huge. So, for example, as HSBC, we're the world's biggest trade bank outside of China, right? So something crazy like 40% of certain trade corridors, we finance some part of it, right? But we don't have the means as a bank to help, for example, a cocoa farmer, because we have no visibility of what's happening there. So we can't actually create a financial instrument that, for example, would help that part of the supply chain. And I think blockchain is profoundly going to shift the dial in terms of bringing on into the system. And I don't mean the technical system. I mean the system of providing finance. It's going to bring a wealth of new asset classes that have not been visible to the financial services industry. They're just not there. You can't buy an instrument on the kind of productive capacity of big chunks of the planet, which means these parts of the economy are massively underfunded because there's no means for a bank. If you look at Grameen Bank in India is a charity. It's never made money because it's trying to help lots of small micro enterprises get going. The financial industry does not know how to deal with that. But if someone can stitch together 100, 200,000 of these, we know how to add value there. And I think what Florian and Ren are pointing to, it's those sorts of things that certainly we're seeing that are going to have a profound impact, certainly in our region. I'm not in a position to talk about Europe.
Sure.
One number that keeps coming up for years now, and it's still the same number roughly, is this $2 trillion funding gap globally in the SME and micro company sector. It's there for a reason. I absolutely agree with you, Anthony. I would add one point. We'll see this broader access to assets, and assets being, it's easier for us to see them, engage with them, transacting them. On the other hand, we'll also see more and other funding sources. That for me is almost a bigger change. And we see this in this micro lab of blockchain and NFT, non-fungible tokens we mentioned earlier. We see these experiments and they work. And we will see that scaling out to a much broader group. And then you have on both sides, and the access to the assets as well as to, let's say, quote unquote, the investors or the funders of these ecosystems, a much more direct interaction. So flows will dramatically change. That will take time. But I think we're at a very interesting point in the financial services history that, as you said, Anthony, goes back a long time, and we haven't seen in some areas not a lot of fundamental change of how we do things, where we are now seeing this change to happen and to have a real impact.
If I can continue on that thread, and first just ask Florian to further clarify, and then get Renu's and Anthony's input. But Florian, you mentioned that magic acronym again, NFT. And I think we'd be remiss not to look at that a little bit, because there's one argument that says, look, this is just another bubble. I mean, it's, ridiculous. It's memes. It's 15-second tunes. It's TikTok, spiels and so forth. So there's that side of it, which does seem to have a lot of silliness, even if you could make an argument for some sort of economic value. But I'm getting a sense that you're talking about something much deeper, and for the sake of looking at how NFTs go beyond it, and it also relates to remarks Anthony was making about fungibility. Can you explain more, and then we'll get input from Renu and Anthony as well.
Yeah, of course. A comment on probably cycles. One way to look at that is, how do new technologies emerge? And there is models out there. And we shared this before, Rob, in conversations where you look at technological revolutions and the cycles that they go through. Technological revolutions and financial capital specifically is the book and the research on this, which I think is fascinating and very useful. And one point that you can take out of that is to say, we need the silliness, we need the speculation, we need even the scams at the end of one of those cycles, which means massive inflow, speculative capital, a broad set of experimentation. What is a characteristic of this phases? And, for lack of a better word, because that's being used, that's nerd space. People look at this and say, what are these people? They don't know financial services. And I come from a more traditional capital markets background. We look at this, and a lot of people look at this and say, this is some computer kids doing silly things that don't know finance. But that is actually the wrong way of looking at it, because, time and again, we have seen in other completely different, even the steam engine, different technological revolutions, that this is needed and normal, and that what comes out of this, what I call lab of experimentation and capital just being burned in a way, is real innovation, and the real innovation that then connects back to the real economy. And I think that's what we're seeing. So back to your question, specifically on NFTs, we are in this experimentation phase. And broadly speaking, how you can define that, a non-fungible token. First of all, it's a token, which means it's a representation of rights in an asset in the broadest sense, recorded on the blockchain. And the container to hold these rights is called a token. And this token you can split up in 1 million pieces, as many as you want. You can move it around very efficiently. You can make it accessible very broadly. And so if you think about that, you can take basically any asset, because an asset is a bundle of rights, and make it accessible that way. Why it's non-fungible is because these assets that are now being put into these tokens are either one of a kind or not fungible with other assets. For example, pieces of art, a specific piece of real estate or real estate asset, company shares. We see a lot of experimentation here, and what these assets have in common is they were not accessible to the average person in the past. Number one, and number two, is a lot of work and very manual to transacting them. This is why broader participation was not possible. So this is fundamental innovation coming out of these experiments that individually may be silly, but are really important to drive innovation where impact will be much broader.
Right. Renu, if I could turn to you just to reflect on, I think Florian gave us an excellent overview of kind of, where there is deeper context here, but then relating it geographically to Greater China and or maybe specifically what you see going on in Hong Kong, which has a very unique role within Greater China finance and FinTech. Whether it's the NFT space or other elements of froth, Are you concerned about that, or are you excited about it? I think that's kind of the bigger question here is how much is there, just over exuberance, and how much of this is genuine and long lasting?
I think the experimentation and over exuberance is in parts of the market, and to some extent that's okay, because ultimately it will lead to perhaps different models and new innovation coming through. But the broader technology, as I see it, particularly on the tokenization and in certain areas like real estate, now that is happening. And clearly real estate is a huge, it's part of our fabric of our society in Hong Kong. Everyone has real estate, or dreams of
once real estate.
dreams of having real estate. And particularly, we are seeing greater attempts at tokenization and getting even broader markets, players to come in. So I think that is true. On the art side, much less so. But where we are seeing is tokenization, and particularly in the space of factoring and financing of for the trade finance and supply side finance. We are seeing more investors coming into that, more players wanting to be in that. And therefore, in that space in particular, we are seeing some greater tokenizations happening. But one thing I would say generally, while Hong Kong is a major fintech center, the reality of it is also is that we, as a whole, we are seeing capital shift away from early stage investment to much later stage investments as well. So if you look in the VC world, there is much less money in this space. And if there is money in that early stage space, it is going into the tokens and the crypto rather than into the more traditional venture capital side. And because our IPO markets have been so hot, we have seen more shift into the private equity side.
Anthony, before we turn to questions from the audience, I wanted to see if you could maybe continue that thread, especially relating to, as Renu was talking about there, you have, the traditional banking, right? The factoring, the supply chain financing, which HSBC obviously dominates in globally and throughout Asia, and is very active in with Greater China. Do you see the sorts of disruptions that we were talking about occurring in unique ways there that people should pay attention to?
First off, the banker and me had a heart attack when you said we dominate. That's not true. We compete in the space.
Sorry, I wasn't trying to sound over promotional or kiss up your organization, but no, I mean, HSBC does have this leadership position in trade finance, right? So I
think what's interesting in the tokenization space is that there is an incredible amount of innovation where there is a massive amount of inefficiency. So the shipping industry goes back 4,000 years in Hong Kong, right? And a lot of it hasn't actually changed. A ship comes, it goes into the harbor, some guy takes a box off, there's a sticker on the box that says this belongs to Rob, and it's quite a complicated process. And I think there are a lot of assets that are like that. The other thing to bear in mind for both students in the audience here is 20% of Hong Kong's GDP is produced by finance. That means 1 in 5 professionals is in finance. I think it is tough to sell a fintech startup that's pixie dust because there are a lot of bankers. And if you look at where the money kind of is landing, it is landing in places, like Florian says, that actually there's a massive information asymmetry that can be addressed. The second thing is, in Hong Kong, it's a small place, so the ability to find 1,000, 2,000 startups is not that straightforward. Getting money to lose, if that's our definition of investment and experimentation, people in Hong Kong are at liberty to lose their money however they choose. I mean, that is one of the things that Hong Kong is kind of quite comfortable with. But the moment you start looking at businesses that really have traction, you start seeing some amazing innovations. So, for example, we're working with an outfit, and what they do is they provide real-time criminal counterintelligence, narco, and cryptocurrency transactional intelligence. So they do node-to-node analysis of who's buying what with Bitcoins. Now, they're not going to IPO on the NASDAQ and, ribbons are going to fall, but they make a hell of a lot of money because there's a massive transparency issue in the financial services sector. If you bear in mind, in some markets, 40% of digital transactions are happening in the dark web. Right? So there's a whole world where innovators are adding huge amounts of value. And the transparency thing, I think, is going to be the next big shift in financial services. We have radical transparency in corporate banking and investment banking in terms of markets. It hasn't iterated down to the retail level, to the individual. And I think Florian's right. I think the next big trend is going to be radical transparency across that financial supply chain. That's certainly where we're seeing it happening.
Well, these are all great observations, panelists. Thank you for sharing the expertise. And I have plenty of other questions I would love to ask, but in the interest of time and our audience, we're now going to turn to the Slido questions, which as noted at the beginning of the panel, you can get those, they're embedded at the bottom of your viewing screen, and you can just type your questions there. You can also vote up or down questions you like if you think someone's already asked something worth promoting. Oh, and I've turned here and I see right now. Okay, so we're going to start with one here. This is from Sarah, and it says, as blockchain is starting to be adopted, what is an area that you think blockchain has yet to be used and more broadly in the financial services market? So yeah, kind of a untapped, it seems there's so much discussion on blockchain, but it's a good question. I mean, what is untapped or yet to be explored? Maybe we'll start with Florian and just go around if others have thoughts on that too.
So in general, being a fintech founder in the blockchain space, we were spreading around plenty of pixie dust, as Anthony said. So I think that applies to a lot of companies in this space. And you could almost say on an experimental level, we've seen almost anything and everything being touched. What I see emerging as a next topic that, again, is now reaching a level where it gets really interesting, and that I'm personally very interested in, apart from my day job and what we do in using blockchain to move commodities around more efficiently, is everything around how we invest, how we make these investments that Anthony mentioned earlier, where much like any experiment, a startup only works around failure and trying again. So the thesis is, if you want to solve really hard problems, then we have to experiment more. We have to move more money into these ideas that seem improbable, really, to work. And to do that, we need to provide pipelines of access of money that is interested in participating in that. And the point I'm getting at is very much like we said earlier. Imagine you take out all these intermediary steps today that are happening that move this money around, for example, in the VC world, into the startups, and you connect investors that maybe only put in $100 directly with these projects. We've done that, for example, in the film industry, just as a pilot, and it worked very well. So I think this will be one area, investing into projects and startups where investors more directly connect, where blockchain comes in as a transmission layer.
Well, it is interesting. If I make a quick observation, I want other panelists' thoughts on this, but I remember a few years ago, China started having some blockbusters come out that were microfinance, basically crowd finance. That was, of course, without the blockchain. But if you blockchain it and you make it universally available, or without, you have to know someone or go through some process, in any way, even if it's on the web, which is generally available. With blockchain, it's more secure, all these other advantages. I mean, that could be huge. I mean, it could transform entertainment financing.
Well, one point to add here is, also on our film project, it changes the relationship that you have with that investment. In the example of films, it's any investor that puts in $100 can say, this is my film, this is my movie. By the way, to your friends, this is my movie.
Right.
Let's go to see my movie. It changes the interaction with how we look at investments. And I think that kind of meaning, you could even say there is this crazy guy who's experimenting with carbon capture, and I want to put my $100 on this guy. And a lot of people, especially a younger generation of investors, say, okay, maybe those $100 are gone, but I want to support people, figuring out hard problems. And I'm excited about this trend. I think we'll see a lot more of this.
Renu, any thoughts from your side on what is yet to be tapped?
I think for me, a big part of a blockchain that could tap it is protection of really IP. And what I mean by IP is a broader definition. I see particularly in Asia and the economies of places like India, Philippines, etc., which have large rural populations and arts and crafts and traditional, arts which are declining rapidly. If we could have a blockchain-based system where someone produces a piece of music or produces an art form, a bag or a traditional painting that goes on top of it, which can then be on the blockchain space, and so that the IP is clearly belongs to them, and that people can then potentially buy those themselves, I think is a very underexploited space. It's a hard space to access, but it basically will allow some of these industries to flourish and provide, and it's all to do with sort of financial inclusion and social inclusion, which I think is increasingly going to be needed when our normal manufacturing kind of jobs are being automated away. So we need to be able to show that if we create something, that we have the right to it, and then a potential stream.
Anthony, I'd love to pose the same question to you, but in the interest of another student's questions, which I think is quite interesting and also in your wheelhouse, as it were, it's from Heidi, EMBA, and she's asking, do you see FinTech innovation being supported or challenged by the central bank controlled cyber yuan? So China's digital currency has been getting a lot of discussion recently. What's your take on that?
If you look at payments in China right now, from a regulatory perspective, within the Chinese market, there already is a cyber yuan. 90% of the transactions don't happen in cash. The M1 funding is happening in 2 payment rails, which the regulator see.
Just to give Heidi's question some oomph there, but what about a central bank control? You're talking about a digital currency that's traded as it's basically kind of a digital wallet that's been added on. What about the digital kind of a crypto renminbi, as it were, right?
Sure. No. I think it's a logical progression for all central banks. I suppose it's. Having lost a lot of investors' money in my career and having made investors a lot of money, I'm a bit torn, between the radical innovation and the let's keep our feet on the ground, But a lot of these technologies are a solution looking for a problem. Okay. Blockchain, in many instances, is a solution looking for a problem. And for the last 10 years, that experimentation has gone from broad to narrow where it adds value. It's the same with crypto. I think the cryptocurrency thing is totally frothy. Governments will issue cryptocurrencies because it's an efficient way for them to distribute M1 money. It's pretty straightforward. Bitcoin, despite its enthusiasts claiming it's going to radically change the world, well, 40 to 60% of the transactions are criminal in nature. Now, the enforceability of a blockchain assumes one important thing, that there is a government somewhere that will enforce that contract. No technology company claims enforceability, that they're going to do enforceability. So I think Beijing's experiment with the crypto yuan is amazing, because it will allow central banks to evolve the way they interact with one another. I know the Fed is looking at doing the same thing with the US dollar.
They have announced that. That's right.
It's the logical next step, because the innovators, like Florian has pointed out, have shown there are massive efficiencies to be gained. Systemic efficiencies if you do this. So I think look, I wouldn't launch a cryptocurrency in Asia tomorrow. I mean, I would really think seriously before doing it, because historically competing with the government has never ever worked.
Yeah, and what's interesting about China, of course, is it's the world's largest source of Bitcoin mining, and yet Bitcoin is banned. So you've got one of so many interesting contradictions there. Florian, if I could pose to you a kind of related but slightly different question we have from a Chris, full-time MBA, and he asks, what do you believe are the most significant implications of China's future digital currency? So kind of just going beyond what's the implication for innovation, but what's the future implications of this, the most significant ones?
I would say the most significant one is it's pushing innovation globally. We've seen, even in the blockchain space, and as a startup, we struggled for the longest time bringing blockchain products. We built blockchain technology to the market. One event that dramatically increased interest and incoming traffic of requests in our company back then, FinFabric, was the Chinese government or the central bank officially, and we knew this unofficially, and there were papers and everything floating around on the internet, officially saying we're experimenting with this, and you could tell this is happening. It just, everybody went on and said, what are we going to do now? At least here in Greater China, what are we going to do as a company, as a financial services firm about this? So it was driving interest in the space. And you see that, as Anthony said, basically every central bank in the world now is at least thinking about it. I would say most of them are experimenting with it. It just happens to be that China is way ahead of the curve at the moment, because they started in 2015, 2016 with this. The second thing is, and here I have to speak as an economist, I think a massive change, if you look at central bank digital currency, is how you use currency, for fiscal policy, for stimulus. A CBDC by nature of course is digital. So for example, what you can do is you can be very targeted what certain earmarked renminbi can be used for. And this is already happening. In the pilots that we're seeing, renminbi is basically given away. But then you can only spend it in certain stores, in certain, let's say, areas of retail. And so you can be very surgical about what you do as a government with money in the economy in the broadest sense. The second thing is data and analytics. We're used to, okay, the quarterly data comes in. We look at the quarterly data, analyze. With a central bank digital currency, you have real-time view on the economy. But you need to let it sink for a second. You see in real time what is happening, how money flows around in the economy. That's huge. And you can react to it in real time, much more surgically. So I think from a how it is going to be used, that is massive. And the third point, just quickly, of course, and we won't have time to get into this, it's about geopolitics, right? How do you internationalize further the renminbi? And Hong Kong played a huge role in the initial wave of the traditional renminbi internationalization. I hope it will play a similar role in the internationalization of digital renminbi, because that's all about trade flows and would be an interesting role for Hong Kong. Of course, that's part of the game here.
Sure. Convertibility is another interesting component to all that. But
of course,
let me move to another question here for Renu. And this is from a Sanat who asks, can blockchain remove bias from the social credit scoring that inherently favors affluent clients and adapt it for, I think the thought is, rural communities and people, given they have limited transactional data? And I guess that's a sort of question that could apply to particularly mainland China and much of Asia for that matter. Renu, I think you're maybe on mute, or I'm not hearing your comments there.
Oh.
Now you're good. Oh, I'm sorry, Renu. I just don't want us to not be able to hear you. I don't know if our technical folks can step in there. Renu, why don't you try one more time, and then we'll see if we can hear you. I'm sorry, Renu. Let me come back to you. It's a great question. I know you would have a lot to say about that. Anthony, let me pose the same question to you, if that's all right, and we'll see if we can get Renu's audio working.
Yeah, it's a great question. Prior to working with HSBC, I built a bank in South Africa where we looked at exactly that problem. There actually isn't an algorithmic bias against poor people, because banks have an obligation to get paid back. And the only way that they can figure out whether they can get paid back is to have some visibility on what a community spends. And the moment that visibility is not there, it becomes completely superfluous. And what we spent a lot of energy doing, and I think where technology can help, is these individuals and these communities do have transactions. They are economically active. We just can't see it. So China right now, the People's Republic of China, has the world's first real-time M1 value analysis. If you pull the data from Alipay and from WeChat Pay on an individual, you can see basically 90% of what they spent their money on. Now that is, and from that, a second-year actuarial science student can model a half-decent credit model. The problem we've got in the rest of the world is we don't have that visibility, and for good reason. I mean, it's not. Bear in mind that the Chinese had a massive advantage. They didn't have an interbank system 20 years ago, so they had this advantage when they built it to say, well, listen, chaps, if we were going to build this, what would it look like? Whereas, so they don't have this institutional legacy that other markets have had. So I do think that technology's ability to create transactional transparency, I think that'll be huge. And I think the only way we're going to do it, or one of the few ways we can do it in the Asian region, is with something like a blockchain. Like I said, banks, we know exactly how to deploy capital to make our customers rich, but we need the data. Without the data, we can't assess it.
So if we can get the data, it can solve the bias issues that come from human intervention. And Renu,
can you hear me?
We can't hear you now, please.
I would tend to agree quite a lot with what Anthony has just said right now. What it is, it's about getting the data. And I think the India stack is a good example of what the government there is building out. Now, at the moment, the UPI that the India stack has built has allowed for them to see every payment that basically goes through within the Indian payment system. Now, on top of that, what they're doing is building a data aggregators. So allowing people to then use that to lend. And essentially what that will allow the Aadhaar system and the credit data systems that they're building is
and Renu, let me just, so people understand, when you talk about Aadhaar, that's India's revolutionary biometric identification system that basically allowed people who had never had access to bank accounts, had no records, suddenly they were able to do that. They were able to transact banking.
Yeah, and it was, basically has 1.3 billion people who now have a digital identity, so to speak. And so that stack is being built out. Now, the quality of the data and the amount of data that we get from people is very key to making those credit lending kind of solutions. And here, both the technology and the blockchain, and more importantly, actually within China, and this goes back to not China, in India, is how you collect some of that data. a lot of the stuff that happens in China in particular happens around the mobile systems. And so companies like, can grab that data. Now, one of the interesting things in India has been the fact that even when mobile companies have gone in to collect the data, is that Indians, change their phones. Every time a new plan comes out, they change it. So you get these gaps in data occurring. So sometimes it's as simple as that, which adds to the lack of quality of that data. So I don't think it's an algorithmic thing. It's really about understanding what that data means and how we get that. And sometimes it's complicated or as simple as how they change their phone plans. So you then lose access to that.
So I've just been given word that we have only 5 minutes remaining, and it's expected of me to do some wrap up. But before I do, I just want to just very quickly go around the panel, because the next panel is going to be dealing with investment. And as we set the stage for our discussions, Terry mentioned about, thinking where you could invest. Just if you could say in just 1 or 2 words where you would suggest, and as much as possible, also take out a self-confirmation bias here. I mean, I could understand you would want investment in maybe your own funds or firms, but just maybe talk about a sector. Maybe just give 2 or 3 sectors without a lot of explanation in the interest of time, but just, top of your list for where people should be investing in FinTech. Let's start with Renu.
For me, I think where I'm particularly interested in investing is in the use of the blockchain in particular to solve some of these issues around credit finance in particular and social inclusion.
So blockchain, credit finance, social inclusion.
Yeah, and particularly in backing the women, the women.
Okay, and indeed,
women entrepreneurs.
Yeah, well, I was just going to say, looking at it from an economic standpoint, apart from moral and social, considerations, it's a huge untapped market. I mean, people should definitely see the value in that monetarily.
And that's where technology really comes in useful, because you can make those small loans, you can make those shorter term loans, and that's where I would be tapping into. Okay, Florian, what are your 2 or 3 top picks?
Well, I'm biased on blockchain, of course, because that's what I do every day. I mentioned already earlier the more efficient connection between and including, of course, female entrepreneurs, for example, more directly with investors. I mentioned that. A third topic I want to mention that I'm fascinated by and also that plays a role in our industry is everything around sustainability, climate action, and how that plays into some of these value chains that we mentioned. Trading in commodities, carbon offset, carbon capture, and how you trade that back into these markets. This is all done to some extent, at least manually. And I think it's a very interesting area where we'll see change. Yeah.
Excellent points there. I think there's been so much innovations in environmental finance. And as you mentioned, FinTech could definitely play a huge role there. Anthony, what are your 2 or 3 top picks?
Yeah, I think given that we're speaking to MBA students who are interested in the next step of their careers, I would invest in something that I actually understood properly.
Tall order for many of us, even when we pretend to know more.
Because Asia is an amazing place. It is extremely, extremely competitive. The people are well educated. I think that Western firms' success record in the region has been absolutely patchy in the FinTech space because of this. It takes a lot psychologically to accept that Western Europe and North America are at least 1 or 2 decades behind. Let's exclude China, Southeast Asian countries. I mean, for example, in India, the government has made QR codes a public good.
Yeah.
Why? Because now the central bank now knows who's spending where with the QR code. So the days of wallet companies competing with their own special code, and that's over. And I think that I would invest in something I implicitly understood, and I was solving a business problem.
Okay, understanding and solutions, and the age-old notion of caveat emptor. It sounds like definitely applies, maybe even more so with the combination of technology, financial technology, and then add to that Asia, which even among people who know it well, and I would exclude myself, but just given, for example, what's recently happened with Ant, maybe that's a really good way to conclude. Jack Ma and company seen as these all-powerful, all-knowing, Behemoth as a company, and so insightful as an entrepreneur. Of course, we wish that him and Ant well, but it does show it can be tricky even for people who are very much on the inside. Well, panelists, I want to thank you so much for your time. I am clapping. I'm not going to make it too loud to disturb the audio here, but great insights. Thank you to everyone in the audience who shared your questions. We are now at time. I'll just make a final remark that there will be a 5-minute break following this. Please join again in 5 minutes, therefore at 6:20 our time in LA here, for the next session, which will be the investment landscape and most promising tech sectors for investment. So we'll see if they agree with some of the remarks made by our panelists. Thank you all again, and look forward to interacting with you all soon.
Great.
Thank you very much. Great to be here.